Well, good evening, all. I'm Epstein, and here we are with your Spider ETF stock market wrap-up. And this wrap-up is for Tuesday, the 25th of March, 2025. You know, I watched all day all the different TV stations, Fox, Bloomberg, and CNBC, and I'm trying to listen as to what traders are talking about. But the reality of the situation is, no matter how you're trying to put the spin on these markets and talk the fundamentals, there's one big fundamental at work. That is the tariff. That is the Liberation Day on April 2nd. That is us getting thrown. Is it going to be as bad or worse than the events that are at hand? Keep that in the back of your mind. If you looked at the University of Michigan, the consumer sentiment, if you looked at today's consumer sentiment readings elsewhere, they are plummeting, and they should be. Nobody knows what to do. That stops business from wanting to make big commitments. Yet when you listen to the Fed, you see that the economy is still humming along, and the market is comfortable with that. So trying to make an educated, good guess on these markets, difficult. And you're seeing that in market upon market that's doing this in sort of waves back and forth. Yeah, getting a big rally over the past day and a half, if you'll call it that, in stock indices. Okay, but how much did it fall? So you come back up and suddenly people are going, okay, market's bottomed out. That's your trade bottom. I don't know if it's a trade bottom. I don't know what the president's going to do. I don't know how severe it is. Here's what you know. The EU commissioner was in Washington today, and he didn't walk out a happy fella. India's come to the table wanting to have a large number of the tariffs they have on U.S. goods in order to keep things going. Problem is they're the biggest problem of U.S. tariffs, period. So we'll see if that's enough for them. But there's a lot of countries that have to make good, and maybe we take a look first at some information. I'll come back to this because we'll go into that in about 1 second here. U.S. Mortgage Bankers Association, we're going to get the idea of numbers there. You saw that the home sales, okay, the prices are going up, but you're not moving product. Remember, Linn, I can go on and on. Everyone, K&B, the different home builders going down, then they get a little bit of a bounce. I'm not convinced that they have found the bottom yet. Ahead of Wednesday's monthly U.S. Advanced Durable Goods numbers, you're looking for the figure off about 1%. That compares with January's gain of 3.1%, and that comes out at 730. So what that does is, you know, the market is scared, and people aren't buying. That's what big goods are. When we come over here on this chart, and maybe I should go this way, and you can just take a look at it. I'll stick my head in here like this. There you go. You can see me. By here are the different countries that we have trade with, the big ones. And obviously, when you're over this area, you're getting an idea of the amount of, if you will, the trade balance that's terrible on U.S. goods over here. And here's the positive, because there are countries that we are tariffing where actually they're the ones under pressure. Obviously, what you're looking at is China, the European Union, Vietnam, Turkey, you've got in there, Germany, Taiwan, Japan. So these are your big numbers. Now, they call them the dirty 15 for reasons, but that's where you're at. How much is each one willing to give up? That becomes the question. Here's what we know. China doesn't want to give up anything. China's ready to play its game right to the end. Canada doesn't appear to want to do anything. They talk, but they don't talk. Carney's acting like he wants to stand up to the U.S., and there'll be the retaliatory tariffs. We'll see who does what and where they go, but that's Tuesday. So you're trying to make decisions now on something you don't have a feel for. You can't have a feel. If you know what the president's going to do, well, then I guess you got the feel. Write it on our site here when you watch YouTube and let everybody know what you think. That will be interesting. I see the market is just drifting around right now. The Russell was down, the RSP a little bit lower. The other markets barely higher is the way to look at it. And while the gold market was up today and the GDX copper, this is the powerhouse, the copper. And the copper's the one because that is the one where worldwide people are wondering, what do you do? Economies all use a lot of this copper. And if copper is going to be hit with tariffs, it can be a monster move. You're already there. And that's why it's going. Auto companies had a little bit of a bounce today because there's so much talk that maybe they're not going to be on the firing line right away. They might be later down the road. They don't want to hurt the supply chains. They being our government doesn't want to hurt the supply chains and the like. Tesla added to the gain. It was all over the board. NVIDIA's gone very, very quiet, really not doing much of anything. Amazon and Netflix both got good bumps. This morning, I was saying I thought that we could get back to the $1,000 level in Netflix. I didn't really think it was going to be today, but I thought we were going there, and we did go there today. So we've been looking at Coinbase. And remember, one of the things I told you that when the NASDAQ goes up, it seems to be that then Bitcoin goes up, and it's the biggest of the cryptos, and away you go. And by the way, the CME group, I don't know if you know that they got a $1 billion, I guess, investment from Google in 2021 for blockchain and other events to help trading, and not talking to influence it, but how do you move the monies quicker, the margins, all the work that you do. So a big first phase took place, and I understand it's going quite well, where the CME group, which is the largest of the derivative members, well, it's using it, and I understand it's going very well. That's exciting. So as we take a look here, you've got the higher lows, the higher highs in Coinbase. That's an uptrend. The market is fighting its battle at the 18-day average of closes. So you ended, actually on March 14th, you ended many bear markets. You had the patterns of lower highs, lower lows. You broke them, and you came back alive, and you've had a nice bounce. Whether it turns into something bigger and you're going back here, I can't answer because I don't know what the tariff impact is going to be. But as a chartist, I'm friendly until the market gets back underneath right here, 183.75. I'm not keen on the idea, and I'll share that, of telling my subscribers to buy at 197.70 and risk almost 10% on the trade. I think that's too much money to risk on it. The momentum turned up. The objective was to go back to the 18-day average when you lost the bearish embedded reading, and it's done that so far. Dutch Brothers, as I said yesterday, out of its downtrend as well. The same type of pattern, same dates, by the way. Market climbing, but I'd be a little bit cautious. You're overbought. I think it's a stretch to think you're going to 77.47 right now. It can happen, but it would be a stretch. I also told you, I took a hard look at Starbucks to see, gee, would Starbucks be a better looking chart? By far not. CrowdStrike, they've done their job and they've done it well. They mitigated all the damage that was done when they took system upon system down. Remember, they put a Delta Airlines basically out of business for a while. But the chart action is good. It fought a battle for a week between the 100-day average, and the 18-day in red, and the market's lifting up. I would look for a lot of resistance, though, at the 403.85 level, the upper Bollinger Band. In Sting, I thought that we would not go anywhere. I even said this yesterday. I said, I think we're just caught between lower band to upper band as you spin around. And I still think that in a sideways narrow action here. This reminds me of this action. From the narrowness of these bands, eventually a trend trade does come. We'll see what it is. Right now, the bears took control. If they can drive the market down because they have momentum down, bias down, and trend, maybe to get to 37.56, another $1.50, but it's not the easiest trade. In Baba, so I was looking at what Alibaba and other AI companies are looking to put into AI. And there's a big article today, I think it was in Bloomberg, about how in China, they think Americans are spending way too much money, these big companies, on AI. They think that, yes, the race is on there for it, but you don't have to go the route that the American companies are going with the spending of all that money to reach the same thing. I don't know, but they certainly are not spending the same money. Lower highs, lower lows. And part of the story had to do with NVIDIA, wondering, is it a value here as the market is now down into under 30 times earnings? Is this the spot that you go in, or is that something that traders are going to say, nah, you don't have to spend that money on the chips? This is all part and parcel of that argument. Robinhood, I see a lot of support on pullbacks between 43.12, 42.33, resistance 51.97, an overbought market right here. XOM, which is ExxonMobil, we just started covering this. Since I put it on, it hasn't had one break. So all I can tell you is you're locked into a bullishness here. The market on breaks, in my opinion, will find support. Probably if you had a good break, maybe the 114.17 level, which is the 200-day average of closes. You're at 116.59, so it's not far away. And these are the zones, this whole area that I'm looking for the support. I think you could get to the 18 right here, day average, only if you lost the embedded reading, and maybe even that's a stretch. In XLF, the financial sector, market still acting very good, stretched out, overbought. I'd be very cautious right here. Battleground is the 100-day average in green to the 18-day average, but bulls have taken control. Same thing recently in XLI. No, I call this one of these markets that this is a reaction to a big break we had, but I'd be very cautious about it. In XLE, higher lows, higher highs, and as you can see the market, with an embedded reading, not much you can do with it one way or the other. It's fighting a battle from 90.34 to 89.57. That's the support zone. But to get there, if it pulls back, you'd have to go first through 91.94, and that would break the uptrend on the swing line. And probably to get down here, you lose the embedded reading, which is currently with the reading of 91.90. If it got under 79, that would sort of take all the pizzazz out of the market. As it is, it's bullish right now. And why? Well, obviously, it's drill, baby, drill. It's Venezuelan oil on the president's chopping block. Less oil available. Prices getting a bid because of that in part. When you look at the gold market, you are flirting with losing the embedded reading. You're at 81.02. You finished today just off the lows of the day, not too far. When you reopen tomorrow, if the futures market is much weaker, say $8 to $10, you might flirt with losing this bullish reading and coming down. Remember what I told you. It does not mean, by the way, that I'm right, but I am of the opinion you buy the rumor, sell the fact. The fact is we're going to know before the weekend, well, you're going to take your positions on because April 1st, they're going to tell the president what tariffs to be done. So some traders are going ahead of the fact and probably taking some of the metal profits off in gold. It doesn't mean that gold's through on the upside. It means that's what I just said. I think there's profit taking place. Silver made its one run to the lower 18-day average, held it, and is getting a bounce. Not a trend trade by any stretch. Higher high, lower low. Very different story in copper, which has kept the pattern alive of higher lows, higher highs, because this market is really impacted. And this market, there's a rush, just so you know, from London to send copper to the United States out of the warehouses because the spread between what you can take that metal from, take it that's approved to be delivered on the American markets, sell a futures contract, deliver it, and pay the shipping costs. There's a lot of money to be made, and that's because of the tariffs here. So as I've said, copper's got two different worlds, and you've got to pay attention to that. Bonds and notes, well, they're slipping right now, but not going anywhere. The market's on one hand saying, I want to buy because I don't know what tariffs are going to do. On the other hand, they're going, why am I doing that? Because the economy, I'm looking at the consumer confidence and University of Michigan and other numbers. And I saw today the Philly Fed number was a disaster. The Richmond Fed, these are manufacturing numbers, right in the toilet. Confidence in the toilet. Business in the toilet right now. And yet the Fed is saying things are good. It is beyond confusing. I think it all starts to get straightened out next week. I think once we have an idea of tariffs, be it that their phases they're going to go in, what they're going to do, how countries reacted to the president on it, how many he won over and doesn't have to do, I think a big blanket gets lifted. We won't know all the parts of the puzzle because nobody does, but we're going to know a heck of a lot more. In the dollar index, you're coming up to the resistance point, the 18-day average. So you had a bear market rally. You lost the bearish momentum. You went where we normally do, that line in the sand, as I call it, and you literally stopped right there. And the opposite is true because 57% of the index is made up of the euro. It's fallen down into the support zone. Doesn't mean you can't go lower here, higher in the dollar, but these trends, that uptrend broke, the downtrend in the dollar ended. That doesn't mean they can't regain. There are no trends at work in the currency. Normally there are. I don't see them at work right now. So, you put this all together, you try to come up with something for yourself, and I think we have it. If you're using TradingView, many of you do, all the studies you see me doing here and the ones in my subscriber videos in the morning are included. We put together a suite for it. It uses up 2 of your slots. We sell it and you subscribe to it on a 3-month basis. It's very easy. It goes on. You can modify all of the indicators. They're right there for you to work with. You can turn them on, turn them off, and modify. I mean, I've really made it where I think you'll love it. I also included outside days so you can highlight them. And I think they're so important when they highlight on your chart. It's even something I don't have on my service here. We found it easy to do. You can do that. Just go to iraepstein.com, go to Client Resources on the top. Sign up for it there. We'll get the email. We'll turn it on. We send you an email that just log off your TradingView, log back on, boom, you're set up. It's that simple. I'm Ira Epstein. You have yourself a great evening. I'll catch up with you all tomorrow. Take care.